Hey folks, welcome to one of my educational videos here at InTheMoneyStocks.com. My name is Gareth Soloway. I'm the Chief Market Strategist here, and I also run verified investing alerts as well as verified option alerts. All right, in today's video, I want to talk about understanding the options expiration scam, because I think a lot of people, especially in this market environment, people don't understand the games that institutions play. So to set this video up, I want to talk briefly about the scam initially, and then we'll look at the data points on it, okay? So first off, understand this. Institutions sell 95% of all the options to average investors. That's just the way it is. If you talk to the average investor out there, they're likely not selling puts and calls. Instead, they're buyers of puts and calls. They're taking shots on Tesla going to $1,000 a share. They're taking shots on Apple or on any of the other hot stocks out there. And they're buyers. The institutions are sellers. The institutions make money. They maximize profit by those options expiring worthless, meaning that they are incentivized to potentially manipulate the stock price going into options expiration. So those options that have the most open interest or volume, they will expire worthless. Okay, so think about that. Let that dawn on you. Remember, we're talking about premiums to the tune of tens, 20, 50, $100 million per options expiration that is up in the air, that a potential institution or all the institutions combined will reap those profits if they expire worthless. Now, if they expire slightly in the money, then they still make some of the premium, but obviously not as much. And if they expire deep in the money, then obviously what's going to happen? The institution's on the hook for money in that situation. So obviously institutions, they're generally not going out of business left and right, so they know what they have to do. They have these complex computers that tell them where they need a stock price to close to maximize profit. Now, it may not be where all the options expire worthless, but they can figure out, based on all the premiums they've taken in, where they're going to close a stock to maximize that profit. I mean, this is a pretty simple computerized program that will tell you, if you're selling lots of different options and you've taken in premiums, where it needs to close, where you're going to maximize your profits across the board. All right, so let's first take a look at options volume this past Friday expiration. And volume gives you a general sense of open interest as well, right? And what I like to do here is just kind of take a look at the most actives on the option front, and then look at the stock price and look at the expirations here, folks. Jan 15th. So this was this past Friday when options expired. And most of them, you have a 1 February here, which we'll talk about. There's another February down here and so forth. But look at, basically all of these are January 15th, which were expiring Friday. So the reason why we want to look at this is because this is where the institutions need to close the stock above or below, whether it's a put or a call, to maximize profit and take the whole premium as pure profit. So let's just start quickly with Apple. Apple was the most volume this past Friday, and had the most volume for the week. It was an expiration strike price of 130 on calls. So what I do is I basically show people here that I would say 95% of these closed where they expired worthless. And this is why, listen, I think you can trade options, but I strongly say that don't buy something with an expiration of a few days out or a week out, because it's a rigged game. The institutions are going to push these stocks in a direction where they're going to expire worthless. So let's bring up the chart here and quickly just take a look at Apple, and then we'll come back to Tesla in a minute. But take a look. Where did Apple close? It closed down on the day on Friday at 127. So let's go back to this chart. So did these expire worthless? Did the institution net 100% proceeds from the premium? And the answer is yeah, it closed below 130, so these calls expired worthless. And think about all the volume, all the open interest, all the premium taken in on 607,000 in volume. I mean, just incredible there, folks. Now, what I want to show you is Tesla. Tesla shows up, and Apple actually, let's finish with Apple. So look, in the first 5 of the most actives, we have 3 times Apple listed. So let's just take a look here. Look at 261, almost 262,000 in volume. Look at the strike price, 129 call. So price had to close above 129 for these to pay out anything, even be in the money a little. The next one, Apple, 131s. And if we go back to Apple, Did all of those expire worthless? And the answer is, you're darn right they did. So the institutions reaped 100% profit on those. Now let's just quickly go to Tesla here, because Tesla shows up 1, 2, 3, 4, 5, 6, and all the way down to 7 times. Different strike prices. Very important to kind of take note of here. So let's take a look. So these had the most volume, which implies that they were the ones that were most played generally by investors. And look at the strike price, $850 on calls. So price had to close above $850 for these to pay out at all. And let's take a look where Tesla closed on Friday. And the answer, look at how the stock sold off. So if you look at the high of the day on Friday, it was above, the high of the day was 859.90. So technically, if it had closed right around the highs of the day on Friday, these would have at least been in the money slightly. If it had a nice big up day, they would have been deeply in the money. You can almost guarantee that the institutions drove Tesla down to make sure that those expired worthless. Now, you might say, well, why did they have to drive it down that much? They could have closed it at $845 or $848 or even $849, and they still would have expired worthless. Well, let's take a deeper dive. Let's take a look. So if we go to the next ones, the 900s obviously expired worthless. So think about the premium that institutions took in. Just this amount of volume and the volume right here, holy cow. Now look, 860s, huge volume. They expired worthless. Now let's go down the list. Look at this. Here's some puts. So, all right, so now we have some puts. Look at the volume, 183 plus thousand right there. Did these expire worthless? Yup. And you could have looked at Tesla and said, I would almost guarantee by Friday they won't be below 800 as a price, because then the institutions would have had to pay out on this one. And these institutions are greedy, right? I mean, they just want to take in maximum profits. So, I mean, do you guys see what's going on here? They're closing Tesla at a point where they maximize profit. All right, so let's go down even further. Here's Tesla again, 1,000 calls. I mean, crazy people buying this, although you never know with Tesla. Those expired worthless. I mean, look at this, folks. This is incredible. So all these Tesla options expired, and look at the volume on all of them. And it's not a coincidence that these all were expiring worthless. All right, let's go down here. 840 calls. All right, now we're talking. Now, remember how I mentioned that up here, the 850s, why didn't they close it at 849? Well, now you know. Because if they closed it at 849, these would have been in the money. They needed to push it down even lower. All right, so look at that. Those expired worthless because the stock price closed on these calls below $840. All right, we can go all the way down, folks. The only ones that paid out anything were these 850s, but look at the volume. So the puts 850, these did end in the money, but the volume, this was the lowest volume of any of these going up. So the institution made a calculated analysis and said, okay, it can close below and we'll pay out these because we're going to net all the profits on all the rest of these options. All right, we're going to nail 100% of the premium on all those, and whatever we have here, we'll just pay out in the premiums that we have here, and we'll still make out the maximum amount that we could have. All right, so just amazing type of things. Look at Ford. Look at the amount of volume in Ford calls that expired on Friday. Look at the price point here on calls. So what do you think? Do you think, I mean, just asking, do we think that Ford closed above $10 or below $10? And everyone should know. Calls, they pay out if it's above. Therefore, you would assume it would have closed below. Take a look at Ford. Look at that, guys. $9.83. It closed below. And look at the sell-off. I mean, basically at the end of the day but it closed at the lows of the day. Why did it close at the lows of the day? Because basically it had to, so for these to expire worthless. If it was trading above $10 like it was here, they would have had to pay out those. And they wanted to make sure that it was all profit for them. Taking a look again at the other apples, we talked about those expiring. If you go down this list, folks, I mean, look at here. Let's just do a few. NEO, 65 calls. So price had to close above 65 on NEO. What did it close at? 56. They nailed it on the second portion of the week, the last 2 trading days of the week, right down. All right, let's go back to that list again. Let's look at GME, $40 calls, huge volume. So that, remember, $40 calls, the price would have to close above 40 on January 15th for these to pay out anything. Let's take a look at where GME closed. $36. Look, it was, when it was trading at the highs of the day, it was just the day before. This was at above $40. It would have had to pay out. What did they do? They drove price down. Those closed, basically worthless, 100% worthless. Apple calls, 130, those expired. These, again, we talked about, these are February. So this is interesting. This is the one on here. I think there's actually two on here that are for February's. But look at this. Look at the volume already on these February 19th. What this tells me is chances are, even if Ford goes above 10 in the coming, couple weeks, institutions very well will drive it down below 10 by February 19th, the expiration, to close these out worthless. That's my guess, just based on what we're seeing here with the strikes and the expirations. But do you guys see how all this volume, basically, which again translates to a lot of open interest, meaning that people are holding these, that price in general, we basically have only found on this whole list one stock, the Tesla 850s, that actually closed, and those were puts that closed slightly in the money. Aside from that, that's it, folks. It's amazing. This is what my point is. When I talk about the scam that is options expiration, folks, what you need to understand is that holding something to options X, or essentially buying very short-dated options, they're cheap for a reason. And they're cheap for a reason because the odds of the payouts are 1 in 100, basically. And if you look at this list, that basically speaks to it. This option down here paid out. Basically everything else expired, worthless, that expired on Friday. That is something you have to understand. So these institutions are pushing price around by any means necessary to maximize the amount of options that expire worthless, that have the most open interest, most volume in them, therefore reaping maximum profits. So when I play options, what am I doing? I'm looking for longer outdated. A lot of people ask me, why do you play options 3 to 6 months out? The answer is because I don't want to get caught in this BS. I want to give myself enough time where the institutions don't purposely drive the stock in one direction in the short term, where I have to worry about that. When you play 3 months out or more, the institutions aren't going to mess with that price until it gets closer to the options expiring. That's when they get in the game. That's when they're going to drive these things around. Super, super, super important, folks, all right? So bottom line is understanding the options expiration scam. I hope this lesson is a lesson that enlightens you all. Again, my pleasure to bring it to you from Verified Investing Alerts. Again, you can find my service here at inthemoneystocks.com, and it is a pleasure to open investors' eyes to the real way Wall Street operates. Have a good one. Take care.